Welcome to Dennis Money's 2 Cents, your weekly recap of headlines and stories. I am Matt.
I'm Victoria.
And I'm Rabih.
Yo, guys, we were just talking about how we are the sleepy crew. We all are tired right now. We all have valid excuses. I just flew in from traveling for a few days. Victoria, you the same thing. You had a longer travel than me.
I did. I was in Boston over the weekend.
Yeah, so you were in Boston. I was in Idaho and California. Rabih, you just got a lot going on. So we're all tired, but we are here. We're not missing. We're gonna goose up the energy. Goose up the energy. It sounds like something my dad would say. I don't know what that means.
Is that a real verb?
I think so. It sounds like something. Sounds like something my dad would say. I'm turning into my dad the older I get. Okay. Here are the things we're gonna hit. We are gonna start with 529s. We have teased this long enough. The people demand to know what's happening with 529. So we're gonna start with that.
It can handle one more week.
Like there'll be a mutiny. Okay, 529s. We got a market update, of course. And then, of course, the overachieving Victoria has read and digested a full study and written pages on it. She's just making us all look bad again. I'm pretty sure we were messaging about this, and I was like, hey, don't worry about doing a full study. Like, you can just find an article if you need to. And because it was like up because you were traveling, and I was like, don't worry about it. And you're like, no, I got this. And here we are with the full study. So love it. Okay, let's jump in to 529s, the long awaited what is happening with 529s. So there is a change happening. And I think we need to do like a full show on this. And I think we're going to do a webinar. Now that I say this, I think we're going to do a webinar, turn it into a podcast as well on the Secure Act 2.0 and all the changes that have come from that, because this is one of them. And so just to give you a summary. So 529s, the rules are changing. And this is kind of on top of the rules that have already been changed over the last couple of years, specifically around the government getting a little bit more relaxed with how you can use these funds for education purposes. So a change, I think it was last year, the year before, where you no longer have to use that 529 funds just for college. You can now use it for all education, which is a big deal, big change. Here's some other ones. So the kind of the headline here is excess funds in a 529 can now be rolled over to a Roth IRA. That is the Rabih's like, what do you got, Rabih?
My question is what will be under the excess fund definition?
Yeah, great question. So as far as I know, and Victoria, I know you've done some study research on this as well, so you can tell me if any of this is wrong. But essentially, how I interpret it is, and we'll go over the details of how much there's a max here. But essentially what they've said is if you have excess funds, as in funds in the account that you're not using for education, I think you kind of determine that, right? Like, oh, we're not using this for education. We now can roll this over to a Roth IRA. That's how I interpret it. So there is, did I get that right, Victoria?
Yeah, you got it.
She's my fact checker. So when you hear this, you're probably thinking, like, you could hear this. If you just hear the headline, you're like, oh, that's amazing. Right. 529s are incredible now, right? Because we tend to favor Roth IRAs over 529s in general. Now someone might hear that and say, oh, well, I'll start using 529 now. However, there's some buts. There's some buts here. There's some caveats. Okay. So let's break down what these different kind of like the fine print, right? So number one, this probably goes without saying, but number one is the name of the Roth needs to be the same as the name of the beneficiary. So can't be the owner of the account and I'm going to move it into my Roth. It's beneficiary has to match up. The lifetime is $35,000. One thing you might be asking, Rabih, I know you might be asking this, is like, well, what does that mean? 35K. There's actually they haven't fully been very clear on what this is. Is it like per beneficiary? Is it per owner? They actually have not designated that. Right now, people are interpreting that $35,000 max as per beneficiary, but that has not been clearly made.
That's the maximum amount you can roll over into a Roth, not the maximum amount you can put in the 529. That's right?
Correct.
Right.
Correct. 529s generally don't have a max, or if they do, it's per state, and it's usually very, very high. But the actual rollover to the Roth is a lifetime max. Again, we think per beneficiary of $35,000. The 529, here's another caveat. The 529 must have been open for more than 15 years, which is, a long time. Has to be open for 15 years. Contributions and growth on contributions to the 529. Let me make sure I have this right. Oh, so contributions and growth on the contributions to the 529 within the previous 5 years cannot be rolled over to a Roth. So they have to be in that account for at least 5 years. So account has to be open for 15 years. Contributions you've made to the Roth, to the 529 have to sit there for at least 5 years before they can be rolled. Again, Victoria, anything I'm missing here?
No, I think it's obviously this change just affects our guidance and what we're telling clients. And so I very much see a world where we start to tell like new parents, like, hey, just open a 529, because in order to even be eligible for this at all, it needs to exist for 15 years. So you basically need to open it up before they're 3. So I can definitely see us starting to recommend that and starting to fund it early so that you get both of those timelines met, the 15-year mark and then the 5-year mark as well.
Yep. Rabih's brain is I can always tell his brain is churning right now.
You guys know that I'll relate everything to investments. And in my mind, based on like my humble experience with my 529 accounts, it's the state provides what investment options are available, right? And most of the time they are like, they look like a target date fund that goes to become more conservative as the kid reaches the age of 18. If you want to implement this as a strategy where I'm going to put the money up to 35K that I can roll over and this my 529 and then roll it over into a Roth, maybe I don't want to be conservative during the last couple of years. And here's where I'm thinking, where's the trade-off?
Yeah, no, that's a great point. And we'll hit this at the end of like, okay, with these changes, do 529s, are they more appealing now or not? Like, I will give my thoughts. You guys can give your thoughts, but yeah, you're absolutely right, Rabih. It changes the way you approach those investments depending on now what the goal is. There's a big difference in a Roth IRA versus 529 being used for school on a certain timeline. Like that can definitely change how you invest the money. Last thing on this is interesting. The rollover limit. So rollover from like, let's say an IRA to a Roth IRA or 401k to an IRA, from like retirement account to retirement account, there is no limit to that. You could have $5 billion in a 401k and you can roll that over to an IRA. If you have $5 billion in your 401k, congratulations, by the way. But there's a limit on this. So moving from a 529 to a Roth IRA, again, remember $35,000 lifetime limit. Also, there's a yearly limit of $6,500 per year, the same as the contribution limit. So that's something to definitely keep in mind. The 529 beneficiary needs to have earned income, the same as they would put money into a Roth. So there you go. Am I freezing? Is my Zoom freezing? Are we good?
No, you're solid.
Okay, got it. So those are, and then the other thing that we're not totally sure of, it's not totally clear, is the 15-year clock, does it reset? Because a 529 you can change beneficiaries as much as you want. We're not totally sure. Does that restart the clock of the 15 years? They have not come out with any guidance on that. So the takeaway from this is, okay, our 529 is more appealing because of this, sort of. I would actually still, in my opinion, I would still tell most dentists out there that kids on payroll directly fund a Roth IRA before looking at a 529. Like this changes nothing for me in regards to that or regards to that recommendation for a client. But Victoria, would you say the same thing? What would your take on that be?
Yeah, I agree with what you're saying about kids on payroll. I think it probably more so affects folks who are not dentists and like need a way to shelter funds from taxes. But I think from our stance, I don't know that it will change much.
Yeah.
And I guess there's a lot that has yet to be clarified, but this won't even become a thing for 15 years. So we'll see how this plays out, but we really won't see the benefits for a really long time.
And by the time that 15-year rolls around, something will change.
Something will change.
They'll change rules and
So,
stuff. So
yeah, for sure.
I actually think the last thing on this, I think the bigger change is for 529s to make it more appealing is that you can use them for different levels of schooling rather than just higher education. That to me is a way bigger deal than any of this stuff. So again, doesn't change our advice of Roth versus a 529. So, okay, we spent 10 minutes on 529s. So we teased it for 2 weeks and then spent 2 or 10 minutes on it. So the people got what they wanted, or maybe they didn't. I don't know. Rabih, let's jump to market update.
Yes. A lot of stuff happened in the last week and they are all over the place. And in my mind, I'm trying to like make a coherent story out of them, but I'm going to throw the data at you. First of all, we've got crude, which mainly the WTI gas prices. They've been up 30% since the end of June, which, you know, is a decent number. And yesterday and today, Tuesday, September 19th, they're at $91 for a barrel, which is the highest it's been for 2023. We know in 2021, 2022, oil was all over the place with the fluctuating numbers, but it kind of dropped as the Fed started increasing interest rates, and we thought it stabilized around like $78, $80 level, even low 70s at one point. But now we're back above 90 due to the usual factors like production cuts and stuff. But this will have an impact on other numbers showing up in the economy. And the second one is CPI. CPI last week came in at 3.7%. Just to give you some, background info, in July it was 3.4, and in June it was 3. And when it hit 3 for the first time in June, on 2 cents, we were celebrating. Like, hey, inflation might be over, right?
It's done.
But now,
it's done. Yeah.
Now we're back up 0.7 from that 3. This is definitely related to why with oil prices going up. It's going to have an impact because CPI, measuring how much people spend on, their consumption, oil is in it. What's interesting, though, is that when we look at core CPI, which excludes, oil, or in a sense, energy and food, it's still on a downward trend. So all this shift in momentum of CPI from like going downwards and now it's up is simply because oil has been the main factor changing it. But this doesn't mean that, hey, headline inflation numbers are coming stronger. And because of that, as the market has learned in the last year and a half, if inflation is here, more interest rates, we noticed that interest rates across all maturities of the treasury curve has increased in the past 2 weeks. Also explains why the equity stock market has been, mild in its movement, and it's down around 1.26% month to date for September, talking about the S&P 500.
Yeah.
So given this, overwhelming narrative in the market regarding inflation, how interest rates reacted, we are coming tomorrow to the Federal Reserve's meeting. They did not meet in August. They met in July. Now they're meeting in August. And they didn't meet in August. They're meeting now in September. See, I need sleep. They're meeting tomorrow in September, and they didn't meet in August. So we've had a month where the market has been fluctuating the way it wants. It wasn't really anchored to a Fed decision showing direction. And as with every Federal Reserve meeting, we look at the Federal Fund Rate future to see what are the expectations. How much do we think the Federal Reserve is going to cut, leave, or add to interest rates? And as of now, there is a 30% probability that they would increase 25 basis points, so 0.25%, and there's 70% they will do no change. And the fact that interest rates went up the last week a little bit is more of feeding into that probability. So all of that I said right now will be confirmed tomorrow in what direction the Federal Reserve is going. Word on the street is that the Fed will not increase interest rates, but they will say there might be another one coming through. The reason for that is that last week in Europe, the European Central Bank increased interest rates and indicated that that would be the last time they increase interest rates. So as we can see, the overwhelming story is that although there's still some inflationary pressure from those volatile sources, such as energy, the monetary policy implemented by central banks around the world is kind of reaching its end, where they are going to maintain levels at, those high levels they are at.
I'm going to guess, to your point, that the Fed uses some level of vague language and toes the line and hedges and says, even if they don't raise rates, they're going to say something along the lines of like, we're going to keep our options open because we have no idea.
Actually, they might, because remember 3 months ago when they gave us those summary of economic projections, and they were saying that we expect 3 more raises. According to that initial plan of theirs, there's still one hike from now till December that they're going to hit us with, right? They might not do it. They might.
Yeah.
Tomorrow, actually, so on next week's 2 cents, we're going to get a new summary of economic projections, and we'll see how much they change their mind.
There's the teaser.
That's the teaser.
First 529s, now it's market updates and what the Fed's doing. I love it. And I've felt the oil up, the gas prices. I'm noticing it, and it's more expensive to fill up my car now, and I hate it. So okay, thank you, Rabih, for the market update. Victoria, we got time to go over this study. I know you were like, oh, maybe we don't. We do. Okay, so this was a study around young adults, their attitudes towards retirement and the future. Hit us with the summary. Tell us what we're looking at here.
Yeah, I got you. So this study came out in July of this year. So they looked at young adults anywhere from 24 to 35 years old. So apparently I'm definitely still considered young. You and me both, Rabih. Matt, maybe not you.
Okay. We don't need to talk about how old I am.
Fine, I'll back off. Yeah,
I'm officially in my late 30s.
You're officially in the late 30s.
Well, next month I'll be officially in my late 30s.
There you go.
So
they just took a deep dive into their like perception of global issues, their financial health, and retirement aspirations. And I feel like millennials and Gen Z, we get hit with like, they're really bad with money and they just spend frivolously and whatnot. But if you look at the data, and we just have it really hard, and we're doing the best we possibly can.
Life is just so hard.
Life is so hard being so young. But some stats for you. In this study done by TIAA Institute, 42% of the folks in this study, they're living paycheck to paycheck, and 41% feel that their finances control their lives. And if you look at like rent numbers and inflation and how that relates to income, it is pretty difficult. And most of young adults do not feel that they're going to have the same level of financial success as their parents. So yeah, it doesn't look that great for us.
Let's go over the first line of your notes here that I noticed, and I think it's spot on based on what you're saying. Is young adults are hella financially stressed. That's the whole point of this, apparently, is that they are financially stressed.
Yeah, they are. There is some light there. It's not to say that millennials and Gen Z aren't saving. I thought what was interesting is, of those who are saving, they obviously feel more secure about their financial future. The second thing, which I think is the most interesting, is they enjoy their lives more if you're saving.
Oh.
Yep. So they report.
Oh, if they're saving, as long as they're saving, they enjoy their life more.
Yes.
Interesting.
Because I don't know, I feel like I hear a lot of young folks like talk about how stressful it is to save, but on average, they're enjoying their lives more, and they can obviously handle an unexpected expense. So when we do save, we report being happier and more prepared for the future.
I actually love that I can now say study show on this, because we talk about this all the time, right? When it comes to like the definition of financial planning, and it's kind of a squishy term that a lot of people can like. It could be, when I say I'm a financial planner, that could be anything from I'm an insurance salesman that sells you insurance for commission, all the way over to what we feel we do, which is a comprehensive actual, like, financial planner, coach, like that kind of thing. But when we talk about financial planning, the thing we always talk about is financial planning done right is planning for the future while enjoying the meaningful moments along the way. And it's interesting that you just said this, Victoria, that the study actually shows that saving is not even just about your future. It sounds like you're saying saving for the future is actually helping you live more in the moment.
Oh yeah, absolutely. Now you have a study that you can reference. You're welcome, Matt.
That's so cool. I love this. We got studies. It's not just like a thing we're making up. Okay.
Yeah, but when they say saving, it's not specifically for retirement. I was interested
Just
to
saving,
see
putting
that-
money away for something.
putting money away, but I was curious where that money was going and what that meant for young adults. So first and foremost, I think it's like 60% are saving for emergencies. So a lot of young folks are just saving a lot of cash. And I feel like that makes a lot of sense because of COVID. Probably a lot of young folks got laid off. I got laid off and, and that whole thing. So I can certainly relate. Second one is saving for a long-term goal. So that's purchasing a home, a car, so kind of big purchases. And retirement is number 3 there. And I was actually pretty stoked to see that it was number 3 because I, maybe this is a little pessimistic of me, but I thought it'd be like maybe top 10.
What, for retirement?
Yeah.
Yeah, no, that's actually cool. 36% say they are putting money away for retirement, which I agree. That seems high. That seems higher than I would think. Robbie's
Yeah.
got something. Robbie's
does
thinking.
have something.
Yeah, no, what
Let's
I'm
hear it.
thinking when she said that people are getting happier because they're saving, and I'm like, which type of saving gives you the most happiness? Is it the retirement
drill
saving
down.
or the emergency saving? And we always think of saving as something in the future, but when she said that, saving can actually have an impact right now, it changes our perspective that saving can also be something for the present. And suddenly, like what flashed my mind, you guys are familiar with like Maslow's pyramid or hierarchy of needs.
The hierarchy of needs. Yeah.
And like the basic one is security. And the way you create a secure space for yourself is by being able to handle emergencies. And you can only do that by savings. So
yeah,
savings is as short-term as it is long-term.
It's such a good point, Robbie. And this speaks right to what we talk about, how it relates to debt. Because one of the things on here too, Victoria, is or the next one is, not to steal your thunder here in any way,
please
but
do.
the next one being debt or paying off debt, right? Like,
Yeah.
Which is interesting. They're talking about, my guess is what they're saying is excess cash is going to pay off debt. We would consider that savings for sure. But Robbie, to your point, we've talked about this a lot where you've got, like, people, I think, underestimate the power of liquidity and how that can have a power, like how that can have an impact on your psyche, your emotional well-being, even if you still hold debt, right? Even if you've still got a high debt load, there's a huge difference in saying I'm putting every last dollar I have to pay off extra debt and I have no money in the bank versus saying I actually have like 50 grand in the bank. I still have a lot of debt, but that person that has that 50 grand in the bank is going to feel so much better, even if, again, they still have a high debt load. So it's exactly what you're saying. As that margin of safety increases, I think people's anxiety comes down automatically, even if, again, nothing has changed on the balance sheet in regards to a high debt load. So
I agree. And I feel like there's also some like recency bias with like COVID, just, us transitioning out of that world. I'm sure a lot of folks were very much impacted by that. So having that level of liquidity is probably way more important, now more than ever.
Yeah, definitely. I totally agree. I want to come back really quick, Victoria, to something you said about the study, is that you said, generally speaking, younger people feel, I don't know what percentage you said, but younger people, over 50% said they don't expect to do as well as their parents.
Yeah.
I guess my question for you guys, like, do you feel like that? Or where do you think that comes from, I guess?
I mean, I don't have the data on like, I just saw this and should have pulled the numbers, but like basically when baby boomers were our age, like how did numbers look for them? Like what percent of their income went to a mortgage or rent? And I think I want to say, like, bringing baby boomers back to like when they were 30, I want to say like a mortgage was like 18% of their income on average. And like rent was like, 14, I don't even know, but like it just was a lot easier to afford homes back then. And they had a lot more excess income. So that makes a lot of sense. I mean, student loans alone, like that was weighing very heavily on the budget. So I think it makes sense, but
I think those are valid points. Rabih, what do you think?
Here's the feud. I don't think it makes sense.
Yes, this is why
Rabih
I brought
always
it up.
has the hot takes.
This is why I brought it up. I love this.
Here's the thing.
Get it,
Rabih's
Rabih.
not
Get it.
understanding at all, and I'm trying to be nice.
In my mind, I actually doubt that those 50% that they think their life is not going to be as good as their parents have a proper perspective on life. I think they're just mistaken. It's a very strong I know, like
Just
all these
dead
people are wrong.
freaking wrong, people. You're just
My
dead wrong.
opinion is
Okay,
right.
You
I
heard it
need
here
numbers
first.
next time.
You
Hear
heard
me
it
out.
here.
Hear me out. If you stop looking
Rabih
at
and I are
it,
gonna fight.
if you stop looking at it from the perspective of what this person thinks versus that person thinks, and look at it in terms of a generation, every single generation we've had is living in a better standards of living, better life quality than the generation before it. So when we get to the time where we are as old as our parents, no doubt on a macro level, our life is going to be in a much better position. Depending whether that person is going to participate on it or not is simply whether they are, preparing themselves financially to it. So those 50%, I think they should embrace a, more general perspective on how our lives are actually been getting better generation after generation.
Yeah, I think
Now
that's
you can shoot me.
Victoria is like ready to go. No, I think here I come as the Enneagram 9 to like play the middleman. But I generally think both things can be true. Meaning, I think what Victoria is saying in regards to specifics in someone's life of saying, I look at my parents, I look at my dad when he was my age, and where just in a micro sense, right? His specific experience of how much money he was making and then how much it cost to get into a house and versus now. Like, I do think those specific factors, I actually think, Victoria, to your point, when I see this, I think the number one factor is real estate.
Mhm.
If you look at how expensive, especially over the last several years, real estate has become, oh gosh, I just did it. Guys, sorry, I didn't mean to, but I make gestures with my hands and then
And
my
Zoom picks it up. Wait, can I do
picks it
it?
up.
I'm guessing Victoria and I weren't nodding enough, so he gave the thumbs up to himself.
It's like, yeah. I'm sorry for the
Just
people that
kidding,
are
man.
listening to this podcast. My Zoom continually gives me like responses based on my hand gestures.
I wish I
Anyway,
could.
I do if I do a double thumbs up, I get the fireworks, maybe. Anyway, I do think real estate is the number one factor. It is so expensive now compared to what it was years ago, even 10 years ago. The starter home in a lot of these cities, I know where I am, I know where we are, right? Like in East Side Salt Lake, there's no starter homes. They don't exist. So in that sense, I do think there is some validity to saying, and I've talked to younger people that are trying to get in their starter home and it's way harder. And then rates are up. And so totally get it. But Rabih, to your point, I hear you. And if you're talking generally speaking, it is a fact. Every generation, especially in America, we've only gotten wealthier generally. Life has only gotten better. We've only gotten more access to more innovation, to more services. So I think both things can be true. That is like the ultimate like placator middle road answer, but I think both can be true.
It's a draw.
It's a draw. You're both right. So, okay. Sorry. We are up against time. Victoria, anything you want to yell at Rabih about, or do you guys want to talk about quick question to finish us out. Do you guys respect our elders or okay? We're not going to go there. Victoria, what else, if anything, you want to finish up on this study?
No, we can wrap it up there. I think Rabih and I have a conversation that needs to happen after this.
You're in trouble.
I'll bring numbers next time. I'll quote one of my favorite Disney quotes is from Aristocats. And the little white kitten says, "A lady never starts fights, but she can finish them." So I will bring numbers next time, Rabih, and we'll battle.
You got her going, Rabih. I think this all started, this feud between you two started when Rabih said that women don't watch
Oh
sports.
my God. No,
Don't
we're not
throw
gonna
it
bring
in a
that
different
up. We're not-
podcast, putting it out of context, man.
This is great,
I'll get
guys.
canceled.
Thanks for having me.
Okay. Well, everyone, we're going to come back. We're going to start another fight, or we're going to continue the fight. Victoria's going to end it next time with some numbers. Maybe we'll just pick this up next week. So for now, that was our
Perfect.
2 cents. Thank you so much for listening. We'll catch you next time.